Hello, welcome back to Trading to Freedom. Today I just want to give a quick market analysis, starting off here with the S&P 500. The first thing to note here is that we have just tapped the 200 daily moving average, which a lot of institutions and big players like to watch. And so it's a pretty important line to watch for multiple reasons. In this case, I'm speculating it could be the top of what I think is a bear market rally. Let's just say that I'm considering this entire run-up to be a relief rally in a bear market until proven otherwise. And people ask me, okay, what do you mean until proven otherwise? What does that mean? So for me, it would mean getting above all this resistance directly overhead and opening and closing a weekly above that. That would be the first sign that, hey, maybe this is actually a bull market, which at this current point in time is not very far away. You're looking at about a 3% move on the S&P to get up there, and then it just needs to open and close a weekly up there. And in my opinion, that'd be a pretty good indication that, hey, maybe the bear market is actually over. On top of the 200 daily moving average, also have the descending trend line from the previous all-time high, VPVR point of control. It will show you the volume that was traded at different price ranges rather than different periods of time. So it actually plays a pretty significant role in figuring out where longs or shorts might be trapped. And in this case, you can see it actually plays a pretty important line of support and resistance right here. So that's three things so far, right? We have the 200 daily moving average, we have the descending trend line, and we have the VPVR point of control. You can see clearly the daily RSI is overbought. In a downtrend, overbought has a lot more significance than in an uptrend. We actually have a regular bearish divergence here on the RSI. You see that? You have a high and a lower high in price, and you have high and higher high in the RSI. So all these things adding up. And then the last thing to note is that also right up here, right above the VPVR point of control, is the golden ratio Fibonacci retracement, which is the 0.618. If you wanted the bull market to continue, what I want to see, as I said, is I want to see it come up here and close a weekly, open and close a weekly above all of this. So basically above 4,400 to be the level that I'm looking at. Moving on to Bitcoin. Bitcoin has been in this ascending wedge. And many traders have been watching it, but it has broken down from the wedge. It's 21 EMA below all the daily moving averages. And if we turn on Ichimoku, it's actually looking like it wants to come back down out of the cloud here. If we change our settings to our standard crypto settings, you can see it actually came up to the top of the cloud perfectly and got rejected down. Looking at the RSI, we also had this nice solid trend on the RSI that just recently broke the same time that it broke down from the wedge. At the moment is not looking too good for Bitcoin in the short term. I wouldn't be looking for any bullish continuation until at least it takes out these highs here at roughly 24K. And in crypto, the whole buy the rumor, sell the news type of behavior is very prevalent. And the merge is coming up in about 1 month. September 19th, I believe, is the merge date. And selling off anywhere from 2 to 4 weeks before the event is pretty typical. So I would also be really cautious about getting into Ethereum here. But if it were to see another move up, this would be my target, would be the descending trend line and the 200 daily moving average. Last up on the list is the DXY. Generally, when you see a strong dollar, it is generally bad for asset markets. So far, there is no signs of the DXY stopping its trend either. The angle at which it's trending is actually increasing over time. Given everything that we're seeing with the potential topping out of the S&P, the dollar continuing to rip, Bitcoin breaking down from its wedge, and everything else that I've mentioned, now is a good time to be holding cash, waiting for a move down before you re-enter. And if the market turns around, you don't have to wait very long for my bearish thesis to be invalidated. So you would not be missing out on much. It's just an extra 3% on the S&P. Once again, I'd want to see a weekly open and close up there. So you're looking at probably around mid next month before this is invalidated or not. That about sums up my market analysis for the day. Keep in mind, I would not use any of this that I've talked about today to really trade. You know, with my trading videos, I talk about indicator strategies, and that is really the way to go if you want to trade for a living. That being said, it's still fun and helpful to be able to do a manual analysis like this, especially when it comes to long-term investing. That way you can play the big, large macro swings with your investments where you have a separate account for your trading portfolio and you never ever mix the two. All right, guys, that's going to wrap it up for me today. I hope you enjoyed the video. If you did, please drop a like and subscribe to the channel. And let me know if you want me to cover any other charts in the future. I'm going to try to make these more regular, and I'd love to hear your thoughts. And until then, I'll see you next time. Trade safely.